Hello, I'm Tracy Curo and welcome to our fourth webcast for 2011. Today we begin with a discussion with Andrew Watson about a number of new measures, including changes made to the low income tax offset. We'll also have an update on Tax Time 2011, in particular issues around refund integrity. Then Paul Southwell will provide a range of tax practitioner updates, and in our final segment we'll be talking with Stuart Forsyth about superannuation and changes arising from the Cooper Review. As with previous webcasts, you can view each of the webcast segments individually by simply clicking on your preferred topic. And joining me now is Andrew Watson, Assistant Commissioner for Micro Enterprises and Individuals. Welcome, Andrew.
Thanks, Tracy.
Let's start with the low income tax offset for minors, where the government has made some changes. Just take us through those changes, please.
Sure. From the 1st of July 2011, the government removed the ability for a minor, that's a child under 18 years of age, to claim the low income tax offset to reduce tax payable on their unearned income. This includes distributions from discretionary trusts, interest, dividends, rent and royalties. The changes will affect tax returns completed for the 2011-2012 income year.
You didn't mention salary and wages, so what happens with income such as that a minor earns through work?
Income such as salary and wages will still be eligible for the low income tax offset. Unearned income of minors who are disabled or orphans, as well as compensation payments and inheritances received by minors, won't be affected by the changes. To illustrate this, let's use an example. Jackie's 17 years old, she's earned $10,000 and received a trust distribution of $2,000. The $10,000 Jackie earned from part-time employment is subject to the normal income tax rates, and the trust distribution is taxed at the highest marginal rate of 45%. As you can see on the screen, the table shows Jackie can no longer claim the low income tax offset to reduce her tax payable on unearned income in the 2011-2012 income year. Agents wanting more information can visit our website and search for low income tax offset changes for minors.
There are changes also to the eligibility criteria for the dependent spouse tax offset.
Yes, that's right. From the 1st of July 2011, taxpayers with a dependent spouse born on or after 1st of July 1971 will no longer be eligible for the dependent spouse tax offset. This means that from the 1st of July 2011, the dependent spouse tax offset can only be claimed if your spouse was born before 1 July 1971, is an invalid or permanently disabled, is a support carer, or you're eligible for either the Zone Overseas Forces or the Overseas Civilian Tax Offset.
So if a taxpayer is still eligible, is there anything that they need to do?
They don't need to do anything right now. However, there may be a change in how they complete their 2012 income tax return. So they need to make sure they read next year's tax return instructions carefully.
And the taxpayer who is no longer eligible?
Yes, if a taxpayer is claiming the dependent spouse tax offset through reduced withholdings from their salary and wages, they should increase their withholding rate now. To do this, they need to complete a withholding declaration and give it to their employer. The withholding declaration form is available on our website. They may also need to review their pay-as-you-go instalment obligations for the 2011-2012 financial year. Agents wanting more information can visit our website and search for PAYG instalment fact sheet.
Andrew, let's go now to the changes to capital gains tax relief for compulsory acquisitions of part of a main residence.
Yes, Tracy. The changes to the CGT main residence rules mean that from 29 June 2011, taxpayers will no longer have to pay CGT on a part of their main residence that's been compulsorily acquired by or on behalf of a government agency.
And when we talk about part of a main residence, what does that actually mean?
It means where the actual home is not also acquired, for example, if the government compulsorily acquired part of your backyard or compulsorily created a right of access over part of your backyard.
What years do the new rules apply to?
As well as compulsory acquisitions made from 29 June 2011, taxpayers also have the choice to apply these new rules to compulsory acquisitions and similar arrangements which occurred during the 2004-2005 income year up to and including 28 June 2011.
What if you've already included a capital gain in your income tax return for one of those previous years?
If a taxpayer has already included a capital gain in their income tax return in one of those years as a result of a compulsory acquisition or a similar arrangement, they may seek an amendment through the usual amendment process. These changes will mean they don't pay CGT on the part of their main residence which doesn't include their home, where it is compulsorily required.
And are there rules around the area of land that a main residence is defined to include?
There are. It includes adjacent land and associated structures that are used primarily for private purposes in association with your home, up to a maximum area of 2 hectares. If the land used for private purposes is greater than 2 hectares, you can choose which 2 hectares are exempt. To be eligible for these changes, taxpayers will need to meet criteria similar to the current main residence exemption.
What was the purpose of the changes, Andrew?
Essentially, the changes are intended to ensure that taxpayers who may be subject to a compulsory event are not disadvantaged.
The flood levy came into effect from July 1, and employers are now automatically deducting this from salaries for wage earners. But what arrangements have you made for instalment payers?
Tracy, we've increased individual taxpayers' pay-as-you-go instalment amounts and rates to cover the flood levy, unless our records show that they are exempt. Where we have identified taxpayers as exempt, we have written to them and not included the flood levy in their 2011-2012 instalments. If taxpayers have not received a letter but they still believe they are exempt, they can vary their 2011-2012 instalment on their activity statement. Detailed information about exemptions and on the flood levy in general is available at ato.gov.au/flood levy.
All right, Andrew, some important changes. Let's leave it there, but we'll be back with an update on Tax Time 2011.